Get ready for the shockwaves. We start tonight diving deep into the terrifying world of true crime with the new Netflix docuseries Worst Ex Ever. We are talking about the man known as the Deadpool Killer, Wade Wilson, whose chilling story kicks off this season with a first episode that shows just how devastating his charm and actions truly were. We uncover the shocking details of this case and the disturbing testimonials from those who knew him firsthand. You do not want to miss this deep dive into the darkness.
Here's a simple way to protect your phone without stress. This Allen 3-pack comes with tempered glass screen protectors, camera lens protectors, and an installation frame for an easier, cleaner fit. It's clear, case-friendly, and built to help guard against scratches and everyday bumps. Check the link in the comments to get it on Amazon.
Next up, we shift gears entirely to Hollywood strategy as Netflix makes a massive U-turn on theatrical releases. We examine why they are suddenly greenlighting a wide theatrical rollout for Narnia, The Magician's Nephew, a film featuring Meryl Streep and Daniel Craig, and the unprecedented delay before it hits the streaming platform. This move signals a huge strategic shift, and we break down the financial reasoning behind this bold decision to test the waters in the big screen market. Now, let's look at the digital landscape of Netflix itself. We're talking about a frustrating, quiet removal of features on their web interface, specifically the ability to sort content alphabetically. We explore why this change is happening, what it means for power users, and whether this is just a cosmetic tweak or the start of a massive overhaul of how we discover content on the platform. Find out what Netflix is trying to hide and what it means for your viewing experience. And finally, we close with the financial pulse of the streaming giant. We look at the massive investment activity surrounding Netflix, including Stevens Capital Management, LP's significant stock position, and the recent earnings report where Netflix beat expectations with $1.23 earnings per share. We analyze the analyst ratings, the insider selling by David A. Hyman and CEO Gregory K. Peters, and what this all tells us about the future valuation of NFLX. Stay with us, because this is the full picture. Netflix has launched the second season of the true crime anthology series Worst Ex Ever, a docuseries that delves into terrifying stories of toxic relationships. Following the format of its predecessor, the series features interviews with victims, providing first-hand accounts of the brutality and fear experienced by those involved. Season 2 kicks off with a feature-length episode focusing on Wade Wilson, known as the Deadpool Killer. The first episode highlights the unsettling ability of Wilson to charm everyone, including law enforcement, raising concerns about the response to his actions. The season continues with 3 other compelling and frightening cases. Episode 2 features Jeffrey Paschal, a former 90 Day Fiancé cast member convicted of kidnapping and domestic assault, underscoring that the series focuses on criminal activities rather than mere selfishness in relationships. The production is brought to life through a distinctive visual style, utilizing animation from Blumhouse Productions and ITV America to depict past events, which reviewers found more effective than live-action dramatizations. These animated sequences are complemented by testimonials and bodycam footage where available. Cynthia Childs directed the 4 episodes of Season 2, which is executive produced by Jason Blum, Gretchen Palek, and Jordana Hochman, with Natalie Watts serving as co-executive producer. Worst Ex Ever Season 2 is available on Netflix starting May 6, 2026, promising gripping testimonials, startling footage, and vivid reenactments of betrayal, violence, and deceit. Netflix is signaling a significant strategic shift in its approach to theatrical releases, highlighted by the upcoming wide rollout of Narnia, The Magician's Nephew next February. This marks a first for a feature film financed by the streaming giant, and the film will only be added to the platform's catalog 49 days later, an unprecedented delay. Analysts suggest the timing is deliberate, potentially linked to Netflix's recent decision to walk away from a potential acquisition of Warner Bros. Discovery after declining a higher bid from Paramount. Executives may be using Narnia as a test case to gauge the impact of theatrical releases on both incremental revenue and subscriber numbers. The production itself is substantial, boasting a $200 million budget and a star-studded cast featuring Meryl Streep and Daniel Craig. Furthermore, this adaptation represents the first time Netflix is adapting a successful, previously screen-adapted franchise. Following director Greta Gerwig's request, the film was initially slated for a 2-week exclusive run across approximately 1,800 IMAX screens to secure broader theatrical distribution. Historically, Netflix has maintained a policy of limiting theatrical screenings to a few hundred theaters for only 1 week, primarily to qualify films for awards, a strategy that has drawn criticism. This approach contrasts with competitors like Disney, Apple, and Amazon, which continue to utilize theatrical releases to generate additional revenue and reach wider audiences. Despite the financial costs and deviation from industry norms, Netflix argues that its direct-to-consumer model offers a superior long-term path through subscriber growth. The company has demonstrated flexibility, evidenced by its pledge to preserve a 45-day theatrical window during the Warner deal negotiations. This pivot aligns with other recent strategic moves, including embracing advertising tiers and increasing investment in live sports. Beyond pure finance, theaters are seen as a tool to elevate the perceived cultural impact of Netflix's in-house productions, which have historically relied on major stars to drive subscriptions. The company is reportedly shifting its focus from sheer volume to prioritizing quality. Netflix has quietly removed alphabetical sorting options, including AZ filtering, from its desktop web user interface. This unannounced change has prompted discussion among power users and subscribers who relied on these features to manually navigate the platform's extensive catalog. Previously, users could access sorting options like AZ and ZA via a drop-down menu in the grid view of the movies and TV shows sections. These tools allowed users to bypass algorithmic recommendations and systematically browse content by title or release year. This removal coincides with other recent, unannounced UI updates, such as visual overhauls to the player and changes to how genre rows display content. Furthermore, usability issues have been reported in other areas, including the New and Popular tab, where exact release dates are no longer displayed for titles in the Worth the Wait section. Subscribers reacted quickly on social media platforms like Reddit, with numerous threads expressing frustration over the loss of manual browsing capabilities. Users highlighted the difficulty in finding specific genres without relying solely on the algorithm, noting that removing basic alphabetical sorting diminishes the ability to track new additions or browse comprehensive lists. Analysts suggest this change is part of a larger, sweeping initiative to overhaul the entire web interface across all platforms. Potential reasons cited for the removal include the belief that these features were niche, the desire to align the web experience with mobile and TV app functionality, and a potential shift in viewing consumption patterns, as computer usage may be declining relative to other platforms. Some speculate that hiding raw alphabetical lists obscures the true size and distribution of the catalog, as algorithmic rows can create an illusion of infinite content. Netflix has yet to provide an official statement regarding these changes, leaving users to speculate on the direction of the platform's future design. Stevens Capital Management, LP, has significantly increased its investment in Netflix, Inc., boosting its stake by 846.3% during the fourth quarter. The firm now holds a $5.09 million position in the streaming giant, making Netflix its 11th largest holding in the portfolio. This represents 1.8% of Stevens Capital Management, LP's total investment portfolio. Other major investors have also made notable moves. First Financial Corp. IN increased its Netflix holdings by 900% in the last quarter, acquiring an additional 243 shares. Dai Nuzzo Private Wealth Inc. boosted its stake by 885.2%, purchasing 239 shares. Turning Point Benefit Group Inc. experienced a massive 13,400% increase in its stake, adding 268 shares. MB Levis and Associates LLC raised its position by 177.8%, acquiring 192 shares. Imprint Wealth LLC also established a new position in the company during the third quarter. Institutional interest in Netflix remains high, with approximately 80.93% of the stock being owned by hedge funds and other institutional investors. In insider activity, recent sales have been reported. Insider David A. Hyman sold 5,727 shares on February 9th, totaling $464,230.62. CEO Gregory K. Peters sold 27,312 shares on February 10th, valued at $2,273,450.88. Over the last 90 days, company insiders have sold a total of 1,431,627 shares, worth $135,647,236, representing 1.37% of the company's stock. Financial performance remains strong. Netflix reported quarterly earnings on April 16th, posting $1.23 earnings per share, surpassing the consensus estimate of 76 cents by 47 cents. Revenue reached $12.25 billion, marking a 16.2% year-over-year increase. The company maintained a net margin of 28.52% and a return on equity of 40.92%. Netflix has set its Q2 2026 guidance at 0.780780 EPS. Analyst sentiment shows a mixed outlook. Robert W. Baird reduced its target price from $150 to $120 while maintaining an outperform rating. China Renaissance raised its target from $90 to $100 with a hold rating. Other analysts, including Phillips Securities and Guggenheim, have increased their price objectives, with Guggenheim setting a $120 target and a buy rating. Overall, the consensus rating for Netflix is currently a moderate buy, with a consensus price target of $114.82. The stock is trading at $87.89 on Wednesday, with a market cap of $370.09 billion and a P/E ratio of 28.39.